Welcome to the deep dive. So you asked, and we listened. Today, we're really getting into intraday trading strategies.
Yep, specifically looking at pivot points and the central pivot range, or CPR.
It's definitely a topic that's popped up quite a bit from listeners.
It has, and we've looked at a source, basically a detailed video transcript explaining these tools. It really breaks down how they work and maybe how they can be used together.
Right. And our goal today is just to pull out the key stuff for you.
Thanks.
We know, everyone listening has different levels of experience. Some folks are in the markets every day. Others are just dipping their toes in. So we want to make sure this look at pivot points and CPR is, well, clear, useful, not just a wall of jargon.
Absolutely. The mission here is really to get a handle on these indicators. What do they do separately? How do they potentially work together?
And see how they might maybe point to trading opportunities.
Yeah, but also being really upfront about their limits.
Yeah.
Because let's be honest, no single indicator is a magic bullet.
Definitely not. Okay, so let's start unpacking this. Pivot points first. When we talk about these, what are we actually looking at?
Okay, so at their core, pivot points are basically calculated levels on your chart. They're meant to identify potential support and resistance areas.
Calculated how?
They're derived from an average. You take the highs, the low, and the closing price from a previous period, like the previous day or week or month.
Ah, okay. So for a daily pivot, just focusing on that, how does the math work?
It's actually pretty simple. You take yesterday's high, add yesterday's low, add yesterday's close, and then divide the whole thing by 3.
Right. Previous high plus previous low plus previous close 3.
That's it. That gives you the main central pivot point for today.
Sounds like something you could calculate, but I'm guessing you don't have to.
Yeah, no, thankfully not.
Yeah.
Almost any charting software you use nowadays has a pivot point indicator built right in.
Oh, good.
You just click a button and bam, the lines appear on your chart. Does all the math for you.
That is convenient. So it draws that main pivot line, the P. What else usually shows up?
Typically, the standard indicator gives you 3 support levels below that main pivot point. They're usually labeled S1, S2, and S3.
Okay, support below.
And then 3 resistance levels above it, R1, R2, and R3. So you get this whole framework of levels around that central pivot.
All right, framework established. We see the lines. How do we start actually, using them? What's the first basic interpretation?
Well, the source we looked at gave a couple of initial ideas. First, if the price opens for the day above that main pivot point line,
Okay.
that could suggest a bullish tilt for the day, maybe an early sign of a buying opportunity.
I'm the opposite.
Right. If the price opens below the pivot point, that might hint at a bearish trend for the day. So maybe you'd think about short selling or buying put options.
And the source had some examples of this playing out.
It did. One example showed a stock opening above the pivot, and sure enough, it trended up that day,
Yeah.
eventually hitting the R1 level. And another example showed the opposite, opened below the pivot, trended down through the session.
So it gives a potential bias. But how do we use the other levels, the S's and R's, to maybe refine things like entry or targets?
Yeah, they can definitely help with that. For instance, say you're thinking of buying, and the price is somewhere between the main pivot P and R1. R1 becomes your logical first target. If it breaks through R1, then maybe R2 is your next potential target.
And the video showed that happening. I think you mentioned Tata Motors earlier.
Exactly. That was the Tata Motors example.
Right.
Price opened between P and R1, moved up, hit R1, and then kept going to R2.
Okay. And on the sell side?
Same logic, just flipped. If you're shorting or in a put and the price is between P and S1.
S1 is target 1?
Right. S1 is your first target. S2 could be the next one down. And yeah, the source had an example of that too. Price opened below P, went down to S1, and then carried on to S2.
That gives some clear levels to watch. Now, what about those outer levels like R2 and S2? Do they tell us anything about maybe the move getting exhausted?
They can, yeah. That's where the idea of overbought and oversold comes in. If the price pushes up significantly above R2.
So quite a strong move already.
Right. It can suggest the stock is getting into overbought territory. Might be a warning sign that a pullback or reversal is coming. So probably not the best time to jump in and buy.
But it can keep going higher sometimes, right? Didn't the video mention R3 or R4?
It did. The speaker noted that, yeah, sometimes prices blow right through R2 and head for R3 or even higher levels, although those weren't shown on their specific chart example.
Okay.
But the main point is, above R2, be cautious if you're buying. The video actually showed a case where price popped above R2 and then did exactly that, reverse back down towards R1.
And the same idea applies on the downside with S2 for oversold.
Precisely. If the price drops below S2, it could signal an oversold condition. Maybe a bounce or a reversal upwards is becoming more likely.
So caution on the short side there.
Yeah, probably not the time to get aggressively short or buy more puts. Again, the source showed an example. Price went below S2, then turned around and headed back up.
So these pivot points, they offer a map, potential zones, directional hints. But the source seemed pretty insistent about not using them alone.
Oh, absolutely. Very clear on that. Relying only on pivot points can apparently lead to a lot of false signals. Fake outs.
Like how?
Well, they showed examples where, say, the price opened above the pivot point, looked bullish initially,
Right.
but then it just rolled over and went down. Or it opened below the pivot, looked bearish, but then rallied upwards.
Ah. So if you traded just based on that opening signal...
You could easily get caught on the wrong side, which
Yeah.
is why they strongly recommended combining pivot points with something else.
Like what? Price action, patterns?
Yeah, things like looking at the actual price movement, candlestick patterns, chart patterns, or, and this is a key point in the source, using them together with a CPR indicator.
Okay, perfect segue. Let's talk CPR. Central pivot range, what is this adding to the picture?
So CPR, it's actually built around that same pivot point we just discussed.
Yeah.
That's the middle line of the CPR.
The P again.
Right.
Yeah.
But CPR adds two more lines. There's one above the pivot called the top central pivot, or TC,
TC. Got it.
and one below the bottom central pivot, or BC. So TC, P, and BC together make up the central pivot range.
Okay, 3 lines making a range. Now, finding this indicator, the video mentioned it's not always standard.
That's a really important point.
Hmm.
Yeah, unlike standard pivot points, CPR isn't usually a default indicator in most charting packages. You won't typically find it in the main list on, say, TradingView.
So where do you get it?
You usually have to look in the community script section, indicators built by other users.
Ah, okay.
The video specifically mentioned a couple they found worked well. One called CPR with levels, and another CPR by KCS. So those might be names to search for if you're using TradingView or a similar platform.
Good tips. So, okay, you find it, you add it to your chart. The source then talked about cleaning up the display because it can look a bit busy initially.
Yeah, you can have a lot going on.
Huh.
The recommendation was to go into the indicator settings. First, turn off all the pivot levels except the daily ones. Just focus on the current day CPR.
Right, simplify.
Then go into the style or display options. Uncheck everything except the daily pivot line itself, P, the daily bottom central, BC, and the daily top central, TC.
So you're left with just those 3 core CPR lines.
Exactly. Makes it much cleaner and easier to read.
Okay, makes sense. Now, the width of this, the gap between TC and BC, what does that tell us?
This is really key. The width of the CPR gives you a clue about the expected market type for the day.
How so?
If the CPR is wide, meaning there's a decent space between the TC and BC lines, it generally suggests the market is likely to be sideways, choppy, range-bound.
Okay, wide means potential chop.
Right. And the source suggested that trying to force a directional trade, long or short, on a wide CPR day is riskier. You're more likely to get whipsawed back and forth. It sort of signals indecision in the market.
And the video had examples where this helped avoid bad trades, like where the pivot point signal looked okay, but the wide CPR warned you off?
Precisely. They showed one day with a wide CPR where the price opened below the pivot, which might normally make you think sell. But because the CPR was wide, the market didn't really trend down strongly. It just chopped around. So considering the CPR width might have saved you from a losing short trade there.
Okay. And another example the other way. Opening above P but wide CPR.
Yep, same idea. Opened above the pivot, but wide CPR suggested sideways, and the market basically stayed in a range.
Got it. So wide CPR equals sideways caution. What about the opposite? When TC, P, and BC are all really close together, a narrow CPR.
A narrow CPR suggests the opposite. It often points towards a trending market day. Either a strong uptrend or a strong downtrend is more likely.
Why is that?
Well, a narrow range implies that the previous day's price action was quite tight, maybe consolidating. It often means buyers and sellers reached a point of agreement, building up energy before a potential breakout move.
Okay, so narrow CPR implies a potential trend day. Did the source show examples of that?
Yes. One example had a narrow CPR, the price opened below the pivot, and it led to a really nice downtrend, hitting S1 and then S2.
Nice.
Another one showed narrow CPR, price opened above the pivot, actually near R1, and then it trended up strongly towards R2.
So the CPR width acts like a filter on the pivot point's directional signal.
Exactly. Helps you gauge the conviction behind that signal. Although the videos still advise caution even on trend days, especially if price gets extended, like beyond R2.
Right. Now, there was another CPR concept mentioned, virgin CPR. What's that about?
Ah, yes, virgin CPR. That happens when, on a particular trading day, the price never actually touches the CPR range. It stays entirely above TC or entirely below BC for the whole session.
The price doesn't enter the zone between TC and BC at all.
Correct. The CPR zone remains untouched or virgin.
Okay. And why is that significant?
It's significant for the next trading day. The idea is that this untouched zone represents the level where price didn't trade, maybe holding some pent-up supply or demand.
So what's the strategy?
You extend that virgin CPR's lines, PC, PBC, forward onto the next day's chart.
Okay.
And that extended zone, especially the pivot line within it, is often seen as a potentially strong level of support or resistance for the following day.
So if price comes back to touch that extended virgin CPR line.
It often triggers a reversal.
Okay.
If price was below the virgin CPR yesterday and touches the extended line from below today, it might act as strong resistance. If price was above yesterday and touches the extended line from above today, it might act as strong support.
Did the video show this in action?
It did. A clear example where the previous day was a virgin CPR. On the next day, price moved up, touched the extended CPR line, acting as resistance in that case, and boom, the trend reversed pretty sharply. They even pointed out a virgin CPR happening on the current day in their video, suggesting that its extended line could be a key support level to watch in the future if price fell back to it.
That's a fascinating concept. Okay, so let's try to tie this all together. We've got pivot points for levels and initial direction. We've got CPR width for market type, trending versus sideways, and virgin CPR for potential future reversal zones. How do we blend these effectively?
It really is about using them in sequence, kind of like a checklist.
Okay, step one.
Step 1. Check the price opening relative to the main pivot point. Above P, potential bullish bias. Below P, potential bearish bias. That's your initial hypothesis.
Step two.
Step 2. Look at the CPR width for today. Is it wide? If yes, be skeptical of that initial hypothesis. The market might just chop around. Maybe avoid the trade or be very cautious.
And if it's narrow?
If it's narrow, that adds confirmation to your initial hypothesis. A trend is more likely. The pivot point signal looks more reliable.
Okay. Step 3.
Step 3. Check if yesterday was a virgin CPR day. If it was, draw those extended lines onto today's chart. Be aware that if price approaches that extended virgin CPR zone, it could be a major turning point.
So the CPR really helps filter and add context to the pivot signals.
That's the main idea. It helps you potentially avoid some of those fake outs you might get from just looking at pivots alone.
This combined approach definitely sounds more robust, more nuanced.
It aims to be, yeah, using one to validate and provide context for the other.
All right, let's wrap up this deep dive then. If you had to boil it down, what are the absolute key takeaways for our listeners about pivot points and CPR?
Okay, first, pivot points give you those potential support resistance levels and that initial directional bias for the day. Think of them as a basic map.
Second,
CPR, specifically its width, helps you assess the market whether is it likely to be a calm, choppy day, wide CPR, or a stormy, trending day, narrow CPR. This helps you decide whether to trust that pivot map.
and third,
Third, virgin CPR. Remember that concept. An untouched CPR zone from yesterday can act as a really significant magnet or barrier for price today, a potential reversal hotspot.
and the big, overarching warning from the source.
Cannot stress this enough. Don't rely only on these indicators, or any indicators, really. You absolutely need solid risk management in place. That's non-negotiable.
Right. And they also hinted at adding other tools.
They did. They mentioned that combining this pivot CPR analysis with looking at candlestick patterns could potentially refine things even further. They apparently had other materials on risk management and candles, though obviously we're just focused on the core pivot CPR strategy described here.
Got it. So here's something to think about for everyone listening. How could layering these two tools, pivot points and CPR, potentially change how you look at intraday market action? And thinking beyond just these indicators, what other factors, maybe news, maybe volume, maybe broader market context, do you feel are still crucial pieces of the puzzle for navigating trading successfully?
Good questions to ponder. It's always about building a more complete picture.
Absolutely. Well, thanks for joining us on this deep dive into pivot points and CPR. We hope you found it insightful.